Welcome back to today's More Report analysis videos on Thursday 29th of September with me, Richard Perry, market analyst at Hang Markets. Let's look at dollar yen and a recovery on dollar yen. You can see how the market has just been holding on to 100 big figure for the last sort of few months really, but especially in the last sort of few days that 100 big figure level has become increasingly important, and we've pulled back above the resistance that was in place around 101.20, which was an old low from early September. Breakdown became new resistance, but breaking up above that now turns into a little bit more traction to the upside. You've got a strong candle in the offing today, although obviously it has pulled back from the high, which was 101.74, mildly sort of 30 ticks or so back from the high, but still it is a mild correction in the last sort of hour or so, couple of hours. But you'd sort of look at this daily chart and you think, well, is this beginning to show a little bit of traction? Well, nothing too significant yet on the stochastics, although it is sort of threatening to confirm a near-term buy signal, but the RSI is sort of certainly picked up. The only argument you'd have against it at the moment is the fact we're still in this downtrend, aren't we? We're still holding on to this big long-term downtrend, and you'd need to see a continued sort of recovery back above that. That downtrend comes in around sort of 101.80 area today, and you'd still need to see a continued recovery in the price to sort of break that. Now, it's sort of possible that that dollar yen is sort of entering into more of a ranging phase. Sort of that clearly is a level at 100 big figure that the market is sort of interested in terms of support. A couple of times earlier on this week, or in the last couple of weeks I should say, that we've tested that sort of area and sort of bounced off it. Now the improvement has come on a move above 101.20, so that sort of puts us into more of a positive mindset. And you look at the hourly indicators, you think, well, yeah, the RSI going up on the hourly towards 80, well above the sort of 60 level that previously we'd been failing at. So that's far more of a positive configuration that we've had for a long while on the hourly RSI. Also the MACD lines as well. So you'd say that possibly we're now turning into more of a sort of ranging phase for dollar yen. We haven't sort of broken any sort of long-term sort of negative arguments yet. But you sort of point towards 102 big figure as a bit of a line in the sand, being a bit of a pivot level over the last sort of month or so. So breaking above 102 big figure would be a positive. That would also start to seriously threaten this downtrend as well. So 102 pivot level is an interesting resistance at the moment. But the key level, I think, 102.80 being a reaction high. Actually, that was on the day of the Fed and the BOJ. Sorry, the Fed and the BOJ, that the market reacted with a lot of volatility. So that would be a resistance that the market would be looking out for, to think, well, if you can break above that, then there is certainly something in the recovery. But as I said, we haven't really broken any real sort of barriers yet on the upside. It's just an improving chart, but it is improving. So 101.20 becomes a bit of a pivot line, you'd argue, so that becomes now supportive on the way down, so you're only sort of 25 ticks away from there now. As I said, the hourly RSI a little bit stretched, so maybe that needs to now unwind a bit. So a move back towards 101.20 could well be seen as a little chance to buy. So bear that in mind, that fact that the outlook is improved, but yet nothing sustainable. But certainly there is an improvement on dollar yen with this bull candle that we are developing. So I wish you good luck in your trading today, and I will speak to you later. Thank you.